goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
And good afternoon and welcome to my podcast. I'm Phil Grande. Now, listen to this nonsense.
The rate that financial institutions charge each other for lending on collateral, that critical repo rate, has been the subject of some concerning volatility in the past several weeks, and it has gained the attention of market participants and the Federal Reserve. A New York Fed official confirming to CNBC over the week.
Oh, my God. He'll go on for 2 minutes. Here's the problem. This is what's going on. The repo market. The banks are in deep trouble. The worse trouble than in 2008. The lesson of 2008, when banks are in trouble, if you don't create a repo pool, in other words, you get all these big institutions together and they take money and they pile it in a pool so the banks can borrow from the Fed, this repo pool, as they call it, where, as I told you many times, banks at night lend to each other. Well, banks don't have any money to lend to each other. There's no money, no dollars. So what they're doing is rebuilding the repo pool. And that means there's problems. These banks, remember, are hiding $540 billion in losses. That's right. So this repo, everyone's getting nervous because the banks, that's the base of our whole economy. That's what blew up our housing market in 2008. And the other problem they have right now, okay, is the AI market. Listen to this.
We are talking trillions that we don't even know where the money is coming from. So is it surprising that maybe people are taking a step back and looking at some of the, try to separate the hype from the actual reality of investing in AI?
No, we know now the hype is bigger than the returns. I mean, just unbelievable. This AI has gone insane. And let's listen to this.
NVIDIA sagged 1.8% on the day and now sits 12% below its recent high as investors continue to reassess whether the AI boom is being excessively or unwisely financed.
Okay, so here's what's going on with all this AI nonsense, okay? Now, AI, again, it's a wonderful thing. But what's happened is too many people have come to the party. Too many people. In other words, there's people that shouldn't have been invited to the party. And all the funding of AI coming from the same sources, the very, very wealthy. Now, let's go back a little bit in time. There would be no AI. Just like there'd be no crypto if it wasn't for the wealthy. Crypto, for example, this guy Lido, that is going to be a name that everyone's going to now, will be recognized just like Rockefeller or anybody else. Up to yesterday, till the Congress got into the Epstein files, nobody even knew who this guy was. Without him, there would have been no crypto. Now, Lido, okay, if you go back and look, he was really into AI. but he didn't have any money. He was, again, a director of MIT Media, and he needed to fund this idea because you have to get developers. It's like anything else, like when remember the tech boom, right? Everybody had to go out and get the best developers. That's cost a lot of money, especially when you're starting brand new, right? So Lido started another company while he was at MIT Media Lab, which was called DCI, that's Digital Currency Initiative. Now, he's formed that to get his funding, go out and find people who fund his idea of AI, which is, again, a wonderful thing. It was collapsing. He couldn't get people to fund it. It was really tough. One day, Epstein gets involved. So he funds the DCI, Digital Currency Initiative, which goes out and finds the developers to develop this digital currency. If he didn't do that, we wouldn't be where we are today. So the fathers of crypto is Epstein and Lido. But actually, it's Epstein because he saved Bitcoin. He got the developers. He's the one who put the money in. And in fact, what happened is Congress, the Oversight Committee, found emails directly linked between Lido and Epstein. In one email, they were celebrating. And Lido points out, thank God we had the money to hire these best developers. What a score. It was a celebration because he had the money to pay these developers. If Epstein didn't show up, I don't know where we'd be with it. But I want you to think about the funny part of this, if you call it funny. I do. I think it's funny. So can you imagine all the great names, okay, that are associated with great events? Take our history. Take Standard oil industry. Who do you think of? Rockefeller. Electricity. Edison. Steel. My God, remember? No, it was a terrible thing. All these fires in San Francisco and all these towns before steel, man. People were scared to death of fires. He solved that. Carnegie. Banking. J.P. Morgan. And look at the railroads, Vanderbilt. So if you go to any museum or where there's a history of these great guys, they're all on the wall with their pictures. So you'll see Rockefeller, oil, electricity, Edison, steel, Carnegie, banking, J.P. Morgan, railroads, Vanderbilt. And whose picture is going to be there? Epstein with Bitcoin. I mean, you talk about the clock comes back to 12. Everybody thought they got rid of him when Epstein got rid of himself. But he's the father of Bitcoin. Now when you think of Bitcoin, you're going to think of a convicted child molester, for God's sakes. So that's, it's really not funny, but it is. So it's just again, strange, right? How the clock comes back to 12. So that's where we are with all these great names. So everybody just couldn't believe it yesterday when they found that. Let's go back to Oracle. Let's go back to AI, because AI is becoming a mess. Because the problem with these stocks, they're way overpriced. I talked about the valuations. I talked how they've been stretched. I talked about stock prices are higher than the earnings, but people just keep going and buying this stuff. Stock prices are not aligning with their valuations. Higher prices are also, remember, an indicator of valuation that they're stretched. But people don't care. They keep on buying. But only recently have we seen the leaders, like tonight, NVIDIA. If NVIDIA comes out tonight, which I doubt they will come out with a bad number. I just can't imagine they won't rig those numbers. I just can't imagine they won't rig them to go to the upside. Because would you realize what would happen to this market if NVIDIA comes in with a bad number? And if NVIDIA stays underneath the 50-day moving average where it is today. And look at NVIDIA. When was the last time when NVIDIA made a high? The high was made on October 28th. We're November 19th, and it hasn't clawed back to its high. When was the last time you've seen that? In a very, very long time. So right now, NVIDIA, okay, it's going to really be interesting tonight what happens. It's already underneath the 50-day moving average, so we just have to wait and see. And that's another reason why the market's not doing much, because the market's not doing much because people are concerned. They don't understand what's going to happen with the rate cut. There's too many questions out there. He says he's going to cut rates. And he believes by cutting the Fed rate, the long-term Treasury yield will come down. And as we know, right, if you take the long-term Treasury rate or the bonds, they're the economic barometer. They're the engine. They control what we pay for credit cards and automobiles and mortgages and so forth. So it's going to be interesting. This bond market is connected. It's connected to all this AI stuff. So everybody's connected to AI by some means. So it's going to be very interesting what happens. Very interesting what happens tonight. So you got to that's why you got to know how to sell short. If you don't know how to sell short, I mean, everyone thinks, well, I don't have to know how to sell short. I'll just go buy, Clorox stock, or I'll go and buy Coca-Cola. No. That's not going to happen. There's no place to hide. There's not going to be any place to hide if something happens. But still, nobody believes the market's going to correct. No one believes that. That they think the market will just keep going up and up and up. And that's just it's not reality. It is going to collapse at some point. Just like the housing market's going to collapse. That's another thing that's sitting there that's really bad. And so again, going back and looking at the stocks, I did it with my gang member. I did an overview with him, and I showed him. I said, look, if you really break down this business, okay, and where the money goes, look what's happening, okay? If you go and take a look, for example, let's take the MAGs, Magnificent Seven. Now remember, 2024, the rally, half that rally, we have 500 stocks. We're 7 stocks. That's the real danger. That's the real danger. Just like housing and rent, the real danger is they have a danger too, right? Everybody has a danger. They got a permitting danger. Permitting danger destroying that business. We'll get into that in a minute. But let's take a look at Qs. The Qs are now underneath the 50-day moving average. MAGs are underneath the 50-day moving average. And most important, look at the trend. And very few people look at a trend because Wall Street doesn't want you to look at a trend. When these FOMOs come in, okay, and these tourist traders come in and they buy on the dip as they've been doing, you notice what's happening. It's not working anymore, is it? No. Why? Because the margin debt's so huge, it's historic. We never had margin debt like this. And most of this whole stock market, especially AI, all these stocks have been driven by people with no money. But Wall Street took care of that. They made a deal with the Fed to print money and just keep pushing money into Wall Street, keep pushing money into money, increase the money supply so they can keep increasing the margin debt. Well, now we got a real problem. We got banks that don't have any money. They're screwed because the delinquencies. I mean, they tell us how great the economy's doing. Are you nuts? Here, listen to this. This is so stupid.
And the big 6 banks continues to say that the consumer is strong, resilient. They all use that word, Joe. And the consumer continues to spend because they have jobs. Yes, the labor market is slowing, but they have jobs, and inflation has come down, and they have wage growth in the mid single digits. So things are still pretty good. And the big 6 banks continue.
What a bunch of nonsense that is. That's just pure garbage. What are you, nuts? She's just like reading it off this cheat sheet form. They put lies on it. That's terrible. None of that's true. Consumers are struggling. Their bankruptcies are up 27%. They're struggling. I mean, it's interesting. Housing is the most important thing in our economy. And when you can't have a young couple, if you got to be an average age of 45 years to get your first house, are you nuts? Are you nuts? Anybody graduating from college, 24, 25 years old, they used to get a first home as soon as they got a good job. Go to college, you're going to get a good job. 25, 26. That's the age. That's where everybody got their starter home. No more. The starter homes now are people at 45 to 49. Starter homes. What are you, nuts? There's still people living with their parents.
30 seconds.
And when you look, you take new home construction. They blame it on everything but what's going on. New home construction. The rents, first of all, you want to see there's a problem in the housing market? Look at the rents. In 5 years, they're going up 25%.
4.
Look at home prices and wages in the last 5 years. We'll talk about that when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And the Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Larry Summers. He's on the board of OpenAI. They just got rid of his, if you go to find his office at Harvard, there's no office there anymore. He's gone. Larry Summers has always been a bad guy. Larry Summers. He's part of that whole crew, that whole Clinton crew. And the damage that they did, this housing market in 2008, it's unbelievable. This guy was always a bad guy. But anyways, he's in this mess with Epstein. So they must have the goods on him. I don't know. But let's talk about something good. So rents, again, are crazy. Rents are up. Okay, and this guy in New York, Salami Malami, there, he wants to put rent controls on. Doesn't he read anything historic? Doesn't he go, before he does that, doesn't he go read history? Doesn't he go to Europe and study? I mean, you go online, you find rent control didn't work. Rent control didn't work in Europe. It was a horrible thing. It didn't work. Developers stopped developing. The amount of units available were shrinking. They weren't going to develop. You put price controls in, you're not going to get any product. It's just unbelievable. Then Salami Malami there, he's got Bernie Sanders, another communist, AOC. She don't even know what she is. I mean, she's got the brain the size of a meatball. And they're all pushing socialism and rent control. And you can't blame them for that, because these kids never been through a crisis. Sanders has, but Sanders is a real staunch communist. He's a communist, he's not a socialist. He's like Madami. Those two are going to be big buddies. I'll bet you he goes to work for him. But again, all these young people are being radicalized. There you go, radicalized, because of what's going on in the housing market, what's going on in rent. Look what's going on in the stock market. I've been doing this business for 54 years. My first trade. Matter of fact, I have the ticker tape here on my desk. The old ticker tape. And God, when you look at the price of stocks today, it's ridiculous. Young people can't buy stocks. Oh, sure, they can go buy an ETF. But God, I remember when the dot-com days. I mean, young kids had the money. They could buy a house. They could go in the stock market. No more. We lost a big market share in the stock market, a big market share, and the housing market too, because they're the first-time home buyer. But when you see rents are up 25% in 5 years, home prices up 45%, and they're telling us everything's good, the economy's doing well, the consumer's strong. We hear that every day, how the consumer is strong.
And at the end of the day, the consumer looks immensely strong.
Yeah, immensely strong. They're not strong, especially the young kids. They're not strong. They can't get a home. A $450,000 home, you're going to have to make $125,000 a year. That's insane. The wealth gaps in housing's 45, 54%, about 54%. They can't afford houses. So wages are only up, they've gone up half the amount of home prices. Half, 22%. Prices going up 45, that's 5 short years. Now, if you go back and take a look at what was going on, new home construction tripled since 2011. But let's take a look at the interest rates. Take a look at the 30-year mortgage rate in 2010. It was 3.8%. 2011, 4.6%. 2012, got it back to 3.8. So you got 3.8, 4.6, right back to 3.8 again. Then it went right back up to 4.3, 2014. Then they tried to bring it back to 3.7 in 2016. 2018, went right back up to 4.7. They can't keep it down there. 2021, hey, we're down to 3.1. That was for a very short period of time. And then went right back up to 7%. So if you take from 2010 to 2000 and let's say now 2025, you've had 1, 2, 3, 4 years where you could get a mortgage under 4%. 4 years. So from 2010 to 2025, only 4 years. I mean, that's crazy. So And mortgage rates are going to go higher because they're not going to bring down. If you think mortgage rates are coming, you're wrong. The Fed always thinks they can control it. All they're going to do is they're going to set their rate back to zero. Trust me, that's what they're doing. Would be that will lead us into a crash. That will lead us where yields will shoot up. If he turns around and drops interest rates, which he's doing is QE. He already announced the other day he's going to put $300 billion increased money supply by $300 billion. That will shoot yields up. That will shoot yields up. He thinks, well, I'll control that by going in with my yield, the short-term yield, the Fed yield. I'll drop that near zero. This is why, remember, what he's doing, putting $300 billion in, that's the same thing as QE. Don't let him tell you anything different. It's the same as QE. But going back to the problem with the market, the problem with the housing market, and I said this before, is the land cost. That's the problem. Remember, the land, when you go buy a house, on average, it's about 30% of the home price. You buy a house for $100,000, you can't even buy a toilet for the house for $100,000. But you buy a house for $400,000, average price house today, right? Medium range, about $400,000. 30% of that, 30% is the cost of land. That's the problem, not the materials, not even the labor. It's the land cost, and not because they don't make any more, because of the permitting, because of the environmentalists, because of all these, these people running around hugging, trees and eating granola bars and wearing John Lennon glasses and the women letting their hair grow under their armpit and running around in dirty green Volvos. Let's put up more windmills. That's what we need, more windmills. And you and I had to pay for those windmills. Solar, we had to pay for those. We had to subsidize those. Anybody pay federal income tax, we paid for all that stuff. Didn't work. But the land cost, and why is the land cost so much? Because of all the environmental permitting. It takes so long to get a permit. To start construction, not the house. You buy a raw piece of dirt. It will take you from the day you go to the planning board to the day you finally get your permit where you can start breaking ground, putting in your roads and utilities. It takes you as long as 5 years. 5 years. Unless you're in some states or towns where, the planning board people are, thieves and you can pay them off. 5 years. You want to know why? So 5 years, there's no product coming on the market. Very little product. That's the problem, is the environmental people. Nobody wants the environment to be terrible. I remember in Vermont, in Maine, they stopped all construction. If you were in the middle of building a condominium or building out, you couldn't finish it. You couldn't finish it. They wouldn't let you finish it. And if you bought a piece of land, Vermont, communism, this was Bernie Sanders' idea. If you bought a piece of land and you sold that piece of land, let's say you bought it for $10,000, a building lot, and then you sold that building lot for $20,000. They take 80% of the profit. 80%. This is Bernie Sanders. He got that passed. 80%. And he was only mayor. But they had a bunch of nuts in Montpelier. So can you imagine? They took your land rights away from you. So you bought a beautiful piece of land. You want to start developing it. They'd come in and take your profit. It was crazy. Then they said, okay, well, I'll tell you what we'll do. You can we'll move after 5 years, instead of taking 80% of your profit, after 5 years, we'll take half. We'll be your partner. How did that work? The revenues in Vermont just tanked. The ski areas were going down the toilet. I mean, it was unbelievable. I mean, Vermont is all about recreation. It's all about skiing, right? And Bernie Sanders pretty much destroyed the whole industry until they started. I forgot who came into office, until the new governor. Then he changed it. Nobody wants to make the environment look terrible. Who wants to make the environment look terrible? Especially developers. If you buy a beautiful ranch out west, or if you buy some farmland in Vermont, you don't want the land around you with Ferris wheels and condos. You can't sell your property. In fact, you know that developers are more sentimental to the environment than the environment. The environmentalists. Environmentalists will eat his granola bar and throw the wrapper on the ground. The developer's not going to do that, because to sell his dirt, he's got to have a great environment. They always twist it like the bad developer, he was a gangster or something. No way. Developers are better at the environment. Look at, they used to say in Florida, all the golf courses. Look, they destroyed Florida with all these golf courses. Are you kidding? The birds and the alligators are fighting over their condos. The birds, we hear squawking all night long, fighting because they want to live at the golf course. It's beautiful. They got lakes, they got green grass, they can get the worms easy. The developers did a great thing with golf courses. What are you talking about? But going back to the 30-year mortgage, what's killing these kids is pricing. And it's the environmentalists who are killing them. Because it's the environmentalists, it takes too long to get building permits. And then, if they're going to turn around in New York, and this will spread through the United States, price controls for rent? Are you nuts? Why don't they go and read up on what happened to go get Thatcher's book. She wanted to get away from socialism so bad because socialism was destroying the UK. They couldn't build anything. Nobody was building. Rents were going through the roof. And then what happened is they wanted to control the rents. So the developers wouldn't build apartments. They couldn't make any money. Socialism doesn't work. Now, for the stock market, I am telling you, if you're going to succeed, I know nobody wants to hear there's going to be a crash. The minute you say there's going to be a crash, you are hated in this business. Hated. Hated. But there is going to be a crash. And you'll know when the crash is coming if you follow the bond market. You'll know. That's a big help, following the bond market. It will always let you know when the crash is occurring. Always let you know. It will never let you down. I mean, crashes aren't big surprises. Everybody thinks, oh, my God. Just like what happened with Home Depot. Oh, my God, did you see what happened to Home Depot? Oh, my God, we didn't get any. And the CEO comes out and lies and says, oh, we're down because we didn't get any storms. I mean, it was a big surprise. Here, I'll put it up on my chart. Big surprise, my butt. Look at this. Home Depot. Here, you see my color-coded chart, my Pro 2? Watch this. I'm going to go and take my little tool, pop it in here, click it on, and see where the yellow came in. The yellow tells you the truth. We knew that Home Depot was going to have lousy earnings. The clue started in September. And then we really knew from September, first it started around September 2, September 3, the clue was, uh-oh. And then we really got a confirmation that earnings were going to be back between 2019 and between September 19th, September 26th. By October 9th, now we've been already shorting. By October 9th, you knew when earnings came out on 11/18, they were going to be terrible. Why? Because the chart follows the money. And all you have to do, there's no surprise as to a crash or correction in a stock. You always know. You just need the right tools. Join us. Check out my Pro 2. It works. 225,000 people think so. PhilsGang.com. Free. 10 days.
Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.